Welcome to the Titans of Industry Show, our weekly wealth research group interview with some of the premier freethinkers of the world of finance. And in the month of April, we released a number of important interviews, including dollar vigilante Jeff Berwick, best-selling author Jim Rickards, gold expert Alistair McLeod of Gold Money, and crypto entrepreneur Trace Meyer. Today, the show will especially resonate with people who are like me, simply fascinated with money, finance, economics, and the financial system itself. And we got a walking encyclopedia with us. Charles Hugh Smith is a popular blogger. In fact, he's the owner and writer of of2minds.com, which CNBC listed as one among the top 10 alternative blogs for finance in the world. He's also the author of 11 books, which we'll talk about some of them. They're brilliant, on economy, technology, and society, including A Radically Beneficial World, which we'll get into later. So, Charles, how are you today?
Great. Thank you so much for having me as a guest on the show.
Well, I'm glad you're with us. Of course, I'm very jealous because you told me you're speaking to us from the Big Island in Hawaii. But obviously, I'm glad you took the time, and I'd like to ask you, first of all, something that I've always been intrigued about. So I've read so many great books about Warren Buffett and the Warren Buffett strategy in the stock market, and basically for the basic investor, for the part-time investor, someone who has a portion of his discretionary income that he wants to allocate every month to investments. Tony Robbins just wrote a fantastic book called Money Master the Game, and in it he interviewed 52 of the world's billionaire money managers, and basically came to the conclusion that what Warren Buffett says is pretty much accurate. Put 90% of your money in long-term compounding stocks, 10% of your money in some kind of a bond, and let it go. Don't do anything else. Don't start choosing individual companies, etc. And obviously, for the average investor, for the guy who doesn't have a few hours a week, that could be a great strategy. But do you think that the American economy, the S&P 500, which has made so many people rich beyond belief because of the 8% compounding rate over the last century, including companies that have outperformed Warren Buffett, like Philip Morris, the tobacco company that has compounded at 20% a year, which is even better than Warren Buffett. It's insane. Instead of smoking a cigarette in the 50s, if you only took like $1,000, you'd have $1.4 million today. It's pretty remarkable. But anyways, what do you think of the American economy? Could it continue to grow? Could American businesses continue to grow at 7 to 8% going forward?
Well, that's an excellent question. And I as you provided a context, which is like 100 years. In other words, we have to start by asking, where are we in the long economic cycles, if you believe that there is such a thing as cycles. And there goes by a lot of different names. There's the business cycle and the Kondratiev cycle and so on. And so the reason why we want to orient ourselves in that cycle, or at least question whether we're in a cycle, is if you're buying for the long term, meaning like 30 or 40 years, well, in that time frame, then you can recover losses that you experience in even something as long as a Great Depression that lasts a decade, right? But if your window of investing is a little less than 4 decades, then you really don't want to be jumping into a market that's about to take a big hit. Like, for instance, look at the NASDAQ. It just topped 6,000, right? And the NASDAQ is, of course, tech-heavy, biotech-heavy. Well, if you bought it around 5,000, back in 2000, it dropped, below 2,000, and it took a long time to recover. And so that was 17 years ago. So you haven't really made enormous gains there on what your original purchase. If you kept adding every month, you've done okay. But we have to ask, what if the economy's on the verge of changing in some fundamental fashion. You know, that the last 40 years or 50 years or even 70 years from the end of World War II is no longer a good guide to what's happening in the next 10 to 20 years. Then we're going to hesitate on the Buffett strategy. But I want to kind of drill down real quickly into the Buffett strategy. And what he really does, in my view, is he buys reliable income streams, right? That's why he's such a big investor in things like railroads, insurance, chocolate. He buys income streams that continue on rain or shine, recession or growth. And so that's, I think, the thing that we may want to focus on. Maybe instead of looking at the S&P index, we may want to have to drill down and go, what do we need to buy that is going to produce very reliable income streams, even if the economy tanks.
And what would those industries be?
Well, I mean, if that's a lot of people decided to just buy Buffett's company. They buy shares in his company rather than the S&P because they figure he's already got the reliable things. Well, he's obviously bet. We all know he's bet big on insurance and transportation in a sense of the railways, and he famously owns See's Candy, which goes up a couple bucks a pound every year. And, we all just kind of grumble and just pay it because, we want whatever See's has to offer. So he basically has these mines that just keep pumping out money. And even in recessions, people still make their insurance payments and they still buy chocolate as a treat or a gift, and we still have to transport food and stuff on the rail line. So I think that we might want to broaden that and say maybe avoid indexes that have crashed hard twice in the last 17 years, and look for companies that are pumping out super reliable income streams, or buying or developing a small business that you own lock, stock, and barrel that generates reliable income. That's
interesting. So going past this to modern day, there's a huge interest in what will happen if the tax cuts that Trump proposes do get approved by Congress. So his tax plans are to cut corporate tax, for instance, to around 15% from 35%. Now, the U.S. does have the highest tax bracket for corporations, among the highest in the world, but it also has the highest tax avoidance and loopholes for corporations anywhere in the world. It's $188 billion a year in tax avoidance, and I'm guessing he knows this as much as I know this, that if he cuts taxes, companies will not look for loopholes, safe tax shelters, etc. Start bringing money back home to the U.S. Either dish it out as dividends or invest in their own companies, and he thinks that this will create jobs and prosperity. Obviously, otherwise he wouldn't do it. So this comes at a cost. Cutting taxes means that he has to treat the national debt as secondary, and it's not the priority right now, and he's going to raise the debt ceiling again and again and again using the magic of the fractional reserve banking. What are the benefits of the tax cuts, and what are the dangers or the negative sides of the Trump policy here?
Well, that's an excellent question, Lior, because it really gets to the heart of one of the illnesses in the U.S., and that is the way that our tax structure, both for individual taxes and corporate taxes, it's like a system rigged for injustice, right? Because
before you even say it, I'd like to tell you that the tax code in the United States is longer than the entire Encyclopedia Britannica.
Yeah.
It is an insane tax code. Insane.
Right. It's just completely rigged. I think it's 40,000 pages or something, and it's filled with these kinds of exclusions for particular powerful corporations, like a corporation that was incorporated in Delaware on April 1st, 1932, and then that turns out to be General Motors or something, right? There's only one company that qualifies for that tax exclusion. So it's like so people are, this is like the corruption of the American economy, right? Is that you can, if you're a wealthy financier or corporation, you can buy a tax break through your congressperson, right? For a really modest, like say if you donate $250,000, that's nothing. But to somebody running for Congress, that's a pretty good chunk of change, and they'll bend over backwards to write your tax break in. So it corrodes the sense that that the system is a level playing field. And on the corporate level, if corporations don't really have all the the tax attorneys and the trickery, they end up paying 35% while somebody else pays zero. I mean, that is like so wrong, right? And so it breeds a sense of injustice, and that's really corrosive to society. But in terms of the economy, we all know it's insane to have a nominal tax rate that's never paid, because as you say, we're spinning our wheels and throwing a lot of money that's not really, that could have been invested wisely, but instead it's just paying tax avoidance schemes. So I think Trump's on the right track, and I myself would even consider getting rid of the corporate tax entirely, or put it at like 4%. Because if you look at the revenue streams that go into the federal government, you find that the corporate tax is not that significant because of the tax avoidance you describe. I think they raise like $200 billion a year, and that's out of a total revenue stream of like 2.5 trillion, right? So it's not a big amount of money compared to the payroll taxes like Social Security and Medicare, which are over $1 trillion a year, and private income tax. And so to move on to your second topic, what happens when the corporate tax rate goes to 15%, which is more in line with Japan and many of our European competitors? Well, as you mentioned, there's at least $1 trillion, and some estimate it's well over $1 trillion in cash sitting overseas because U.S. corporations don't want to bring it back and pay 35% on it. If that money comes back to the U.S., what could it do? Well, if it was invested in productive assets, it could do quite a bit. And so then the question becomes, can Trump and all the state legislators and authorities, can they create an environment in which companies will say this is a wise investment to bring production of goods and services back to this U.S. location? So the tax break is what I'm suggesting is that's step one. But you also have to create an entire business environment that's not hostile to business, right? You've got to actually encourage it. And if you wanted to do something that would help businesses, you'd have to look at revamping our entire educational system so that they've got an educated workforce, or a workforce that's educated in ways that are meaningful to them. In other words, that are actually creating workers who can do the work they need done.
You know what? This is part of why I think the U.S. has thrived for so long. The private sector, even with politicians doing so many stupid things. It's because when you survey CEOs around the world and you ask them where is the most competitive place to do business, and the corporate competitiveness, they rank the U.S. still second after China. So it's I think what makes the U.S. economy tick so well for so many years is that self-criticism, which is so healthy, where you always think you're doing something wrong and you always try to rectify yourself, right, and make it better. I think that's part of what makes the U.S. economy, no matter, look at the debt levels, look at the national debt, look at the political side. There's so many things that can be better, but still, It's a powerhouse no matter what you do. What needs to happen though? Because look, the $20 trillion worth of national debt is about $60,000 per capita. So basically, you can think of it this way: if the U.S. was a house, the rent would be $60,000 a year, and so you'd have to evict probably 200 million people out of the 325 million people that live in the U.S. I mean, they can't afford to pay the annual expenditures of the house, which is the federal government. So, what needs to happen for the average person to say this is absolutely insane? I don't care if he wears a suit and he's on TV. That cannot be a sustainable economy, and starts untrusting the very thing that he loves the most, the US dollar, this thing that used to be as good as gold, and now it just has that stigma that it's good, and it's the least ugliest duck, or so many things that they call the US dollar, but basically it's a promise to pay by the United States government and nothing more, and it's by law given its intrinsic value, which is obviously the paper it's printed on. And I've seen a show actually about the company that has the contract to print the U.S. dollar, and it's 100 years old lease. They have actually been printing the U.S. dollar since the birth of the republic. It's the same company for the past 200 and something years, right? So
wow,
yeah. What do you think, Charles, will it take? Because 2008 didn't do it. People maybe distrusted the system for a few hours, few days, few weeks, but as soon as you pumped those CNN, CNBC professors, etc., people just got back on the wheel and carried on.
Right. It's a fascinating question, because let's take as an example to answer your question. Look at Venezuela. This was once a wealthy country, right, with a well-educated middle class, and now the country is in ruins, right? Its currency has entered, if not hyperinflation, then extremely high inflation. Everybody that held the bolivar has been wiped out, and people are actually going hungry. And yet, there is still a class of people that is adamantly still supporting this government that's destroyed the nation. And you go, why? Who is supporting this government that's totally destroyed the country? And you go, well, it's like the stakeholders, the people who have benefited from the powers that be, they cling on, until the very last second. And because they're still feeling that they're benefiting. And so I guess my short answer is, it's only when a significant majority of the people no longer feel that they're getting any benefit from the system as it is, then they're willing to relinquish it, let go, and take a risk on some other alternative. And I would have guessed personally that the destruction of your currency would cause most people to go, I'm done. This obviously doesn't work, right? My money has lost all of its value. And that certainly happened in Venezuela. And I actually have a couple of correspondents there, well-educated, college-educated guys that used to make a lot of money and now are down to like making $50 a month or something, just barely scraping by. And I had them do some translation work for me, and I paid them in Bitcoin. Of course, because Bitcoin held its value, right? It can't be devalued by the Venezuelan government. And so I raised that particular issue because when your government fails completely, and then your currency will take the hit, because the hit's going to come from somewhere, right? These losses, when these enormous debts that you describe get defaulted on, the only way you either default on them outright, or you devalue your currency to such a degree that the debt goes away that way. So, there's going to be, the price has to be paid somewhere by somebody. And so a currency devaluation seems to be what history suggests is the least painful choice, which means wiping out everybody that owns that currency. We're just destroying all their wealth. And you go, wow, is that really worth it? To support the status quo? Is that where's the benefit? So, anyways, to summarize, we have to reach a point where the majority of people no longer feel that the system is benefiting them. And the trigger that I would expect would be such a reduction in their wealth through a currency devaluation or a high inflation that they're ready to give up and take the risk of another system.
Okay, well, let's take a scenario here where speak to the younger crowd. Okay, you're fresh out of college, you're just looking to get started. What kind of industries would be the ones that you pursue as an American, and which states will have the best jobs? Historically, people are flocking from some of the states to other states, and because of weather, because of booming economies, taxes are different now in various states. So what kind of U.S. can we look for demographically in 10 to 20 years?
That's a great question, and I've spent a fair amount of time trying to answer those questions, like what would I tell young people? Because actually a lot of young people do write me, because I wrote this book called Get a Job and Build a real career, which kind of summarized, my take on the thing. You've mentioned a couple of really critical points, and I just want to go back and touch on them. One is, what sector would I recommend people study and become experts in? And of course, like you mentioned earlier in the program, automation, robotics, software, all that stuff is eating up a lot of conventional jobs. And so obviously the trick is going to be what industry or field can you get in that's going to not be completely impacted by that, or that you will actually benefit as robotics, technology, and automation advances. And of course, one answer is you become, you get into computer science with a specialty in hardware, that controls robotics, that kind of thing, and algorithms that do functional work, not just coding apps for smartphones, but that you would be getting into industrial robotics, that kind of thing. But a lot of other people who've studied automation, like McKinsey, the consulting group, just came out with a big report, like what fields are most likely to be, automated and so on. It's a good report because they look at exactly what happens. It's easy to just kind of say, well, the robots are going to do everything. It's not quite that simple, right? We all know that. So when we go into, say, the production of oil field and oil services parts, valves and fittings and stuff like that, it turns out that there's a whole skill set for people who can work with industrial robots, but change the programming or do some of the work that the robots really aren't that good at. Robots are good at repetitive things, and but specialized one-time only, one-off kind of work, human welders faster and cheaper. So the employer needs the ideal employee for industrial work. Industrial companies are people who can work with robots and create a lot of value. And when the robot is not optimized for the job, they can do it. And so there's a lot of places in the economy for people who are doing work that can't be that's sporadic or that changes a lot. Like fashion design, for instance. Well, sure, we can have a robot or a big machine loom pump out a particular pattern and all that stuff, but it's like fashions change. And so sometimes it's like, who gets to market fastest. So I would say look at how you can enhance the value of the software, automation, and robotics that companies are going to be buying no matter what, right? Because they have to. It's either automate or die, but not all work can be automated. So you want to increase your own value. And I mentioned in my book, I list these 8 essential skills and that I recommend everybody work on. And they're not related to technology or marketing or getting an MBA. They're soft skills, meaning the skills of learning to collaborate with people around the world, with digitally, right? Because that's the future. You're going to be collaborating with people around the world, and you have to have good communication skills. You have to be able to take negative feedback, right? And work with criticism and get a project done. Project management is core because nobody's hiring you to do something for 20 or 30 years anymore. They're hiring you to do something for 2 weeks or 2 months. Like, get this project done, get it done right, get it done quick, and then let's move on and do another project, right? So there's a lot of these soft skills that even if you came out of college with a degree in something that doesn't have any practical value, like sociology, or myself, I got a degree in philosophy. If you have all these soft skills, you're going to create value for any employer because you're going to learn how to, learn how to learn. You'll be quick at learning. You'll work well with people. You'll communicate clearly. You'll be responsible, and you'll know how to manage a project, the workflow and the finances. So, anyways, there's a lot of good things people can do. In terms of geography, it's quite interesting because we know that millennials so far are, of course, like all young people in every generation, attracted to these really exciting high-value cities. Like it might be, Brooklyn, New York City, San Francisco Bay Area, Seattle, Portland, Minneapolis, Miami. I mean, all these big cities are where there's more jobs, right? Typically, but the cost of living is high and getting higher. So if you're at the top of your game and you can afford to live in those places, well, then by all means go for it, right? But if you don't want to make all those sacrifices, like paying $3,000 a month to rent a flat, or pay $1,000 to share a bedroom, then you can look at smaller cities and rural America, like a lot of places around the world, rural China, rural France, rural Russia. A lot of these rural areas have been hit really hard by globalization, right? Because small factories have closed and people have been forced to move into cities for work and so on. But there's a lot of small, vibrant cities, for instance, Columbus, Ohio. It's a college town. One of my contacts there just bought a house for less than $50,000. Now, it's not a big house and it's not a luxury house, but hey, it's a house. It's an asset, right?
You know what? The beauty of this is you may live there and you may pay cheap rent and everything else, but what does it matter to you if you're connected and you can create all of what you're doing as if you were in an office in the big city? It doesn't matter for many jobs that are independent of locality, meaning that you can create so much margin and profit in your business. Let's say you develop websites. You don't need to be in the middle of Manhattan to do that. You can do that from wherever you want, and the spread would be so ridiculously different than hiring people in New York City to do it, and then hiring people in small towns to help you out with what you're doing. So, yeah, I definitely see what you're saying.
Yeah, no, that's an excellent point. And that, like a lot of cities, like one of my favorite is Bend, Oregon, right? It's out in Eastern Oregon. There's a lot of recreation out there, mountains, streams, and there's a lot of young people, a really great craft beer brewing scene there. There's a lot of really vibrant small cities, or even what you might call towns, that have opportunities, like you said, because if you have digital skills, then you can work anywhere. And in Japan, they call this model, they call it half farmer, half X. meaning like there's a lot of young Japanese people who are tired of like the really high cost and cramped apartments of Tokyo and the other big cities. So they're moving out into the countryside because you can rent a beautiful old farmhouse for $200 in rural Japan. I mean, it's crazy. And then they enjoy, tending an orchard or, growing vegetables and stuff. But, they know that they're not going to make a living off of that, a couple $1,000 a year or something at best. So then they pursue, like you said, their what they learn to do in the city, so they graphic design, illustration, even bookkeeping, accounting, all that kind of stuff can be done remotely. So then they work part-time on that. And so they have a much cheaper lifestyle. They only need to make half the money they used to. And they're living great. So, yeah.
That brings me to kind of my next question. And it is about retirees. Explain to me why Americans don't liquidate some of their assets in the U.S., and they can move outside the U.S. to much, much cheaper places that are safe, that are modern, and which will cost them, 10% of what it costs to retire in the United States, and they will be on beachfronts and basically in paradise. And obviously, you can do that as a family or with your friends. You can move to the same place. Why do you think people are staying in the States when we know that less than 10% of the population has sufficient savings to retire in the United States? Where are some of the options, Charles, to retire that you would even consider yourself?
Well, that's a great question, and you're so right. And that we know that if you want to live here in the States as you get older and you lose some of your mobility and so on, you're looking at $6,000-7,000 a month and up, right, for assisted living. And I personally enjoy Southeast Asia, Thailand, and a lot of people like Vietnam, Malaysia. The whole Southeast Asian peninsula's got a lot of things going for it, including very cheap cost of living. And you can go, and if you want to retire in Thailand, there's starting to be more and more Westerners and people from Japan, retirees from Japan, going there because you can retire really well on like $1,500 a month. And of course, a lot of people look at Costa Rica, Mexico. And there's a lot of other places in the world where it's a lot cheaper to live, and the weather is good, and people are happy to have you come there and help support their economy. Yeah, and so that's a great question, and it may come. I think we're coming to a point where as people retire and they realize they can't afford the U.S. and the lifestyle they'd like, then they'll finally be willing to take the risk, the chance of looking at overseas and giving it a chance, giving it a try, because you can just go and try it. It's not like a all or nothing decision. You can go and go live someplace for a couple, 3 months and see how you like it, and then if you don't, then you can always come back. But you have to give it a try.
Sure. I want to kind of go into millennials. Financially and economically, most people think that, and most people have been taught that the baby boomers, with being 80 million people, a quarter of the United States, and retiring, and they're going to liquidate all their assets. This is going to create a stock market crash, and they're going to liquidate all their real estate, and the millennials won't have the cash to buy their stocks or to buy their real estate, and therefore the fear is that the wealth that's coming from Asia will suffocate all that wealth from the West, and it will move to the East. And my question to you basically is, what are the trends in terms of spending, consumerism, savings rates, jobs that the millennials are pursuing? What is a millennial? Who is he? Where does he live? How many people are there that are considered millennials?
Well, that's a great topic, and we could talk for hours. I'll try to keep it short. The millennials are getting a lot of attention in the States because they're the first generation that there's just more millennials than there is baby boomers. I think the numbers are something like 76 million baby boomers and 78 million millennials, so both around 80 million, but it's a very large a cohort of people, and they tend to be in their late teens to like early to mid 30s is what most people consider the millennial generation, and then Gen X is people from their mid 30s up through their 40s, and then the baby boomers are in their late 50s and over 60 and on up. So we do have very powerful demographic changes ahead, and of course, predicting is difficult, especially about the future, right? but demographics is interesting because it's already baked in. Right? It's not like suddenly we're going to get another generation somewhere of 80 million people. I mean, they already exist. And so, and the boomers, as they pass on in life and die off, then their assets and wealth are either going to be sold or transferred to the younger generations, right? And so how that happens will have a huge impact on the economy. And the one thing we know so far, now that could change, but is the millennials are earning a lot less money than the Gen X and baby boomers did in their 20s and 30s. And so that's the question why a lot of us, including myself, are wondering, well, how can a millennial that's earning a lot less money go buy a house that's tripled in value, in the last decade, right? And I also want to mention these trends are also global, right? I mean, look at the way that housing has skyrocketed in Scandinavia, Norway and Sweden, and the home values in China have soared. And so I think we're facing a global problem where young people don't earn enough money to buy these assets at their current valuation, and so there's like an asymmetry there, and so that's going to be something we really should track, because we have to ask who is going to buy all the homes, suburban homes, especially of baby boomers, and who's going to buy their stock portfolios as they liquidate them to pay for the retirement. So we can look at the domestic, but as you mentioned, we also have to look at the global money flows. And so some countries might be winners as global capital floods in and buys up all the assets in that country, and other countries will be losers as their capital bleeds out.
Now, Charles, I want to speak a little bit about your book, the latest one, A Radically Beneficial World. What is it about?
Okay, great question. Thank you for bringing it up. I basically say, look, if automation is going to wipe out tens of millions of jobs, what are these people going to do? And the standard answer is, well, we're going to give everybody a universal basic income, right? But I don't think that's a good answer for a couple of reasons. The most important one is human beings need purpose and meaning in their lives. Just getting paid to stay home and surf the net or watch TV is very depressing and debilitating, and that what we want to do is, how do you create meaning, purpose, and wealth? Well, by accumulating capital, right? That's what capitalism is you accumulate capital. And nowadays, capital isn't just fishing rights or a factory. I mean, it's knowledge, right? You're learning skills and skill sets. And so we should be figuring out a way to offer people a way to get ahead in life, not just, here's like just enough money for you to scrape by, and we can see what happens when you do that to people is they get debilitated, they get unhappy, they often get, they seek an out in drugs. And so I don't think universal basic income is the way to go. I think we need to offer everybody a job. And people then ask, well, where are you going to get the money? And so my solution is, and I know this is why it's called a radically beneficial world. It is a radical solution, but I propose that we use cryptocurrency to pay people to do work that isn't profitable for a company to pay them. In other words, there's lots of work in the world, but it's not always profitable enough for someone to pay somebody to do it. For instance, like checking in on elderly people. Well, sure, there's a huge need for people to, but there's no money in it. In other words, an elderly person on a limited pension can't pay a company to have somebody come by and chat with them and cook them a meal and all that. It's too expensive, right? And so then people go, well, a robot will do that. Well, who's going to buy the robot and maintain it? It has to be profitable. And so to me, the reality is a lot of work is not profitable. And so the profitable work will be done by companies and entrepreneurs, but there's a lot of other work that we could have people do. And you could say, well, it's kind of like make work, isn't it? And I go, well, yeah, but you know what? People need purpose and meaning, and they need an income. And by using cryptocurrencies that are detached from the government and the fractional reserve banking system, I think we have the technological means to fund this. And of course, there's a lot of issues that come up with this, and I address them in my book. But that's the core message: is let's give people work instead of welfare. Sure.
And then, Charles, where can people see your work, and where can people find your books?
You can come visit me at of2minds.com. You can read free selections of my books, and there's links to all my books on Amazon, Kindle, print, whatever you like, and appreciate your visit.
Charles, thank you very much for coming on the show.
It's my pleasure. Thank you so much for great questions.